Brian, looking at it's been a bit of a two-sided market. Looks like we're kind of giving it up here now and starting to head lower.
Yeah, you look at the fundamentals in this market, it's probably going to be hard to sustain rallies, in my opinion. Basis levels are really starting to widen out, especially in the case of soybean meal. That basis is really wide to the point that some of these crushing plants are going to go idle because they can't make money with the cash price that they're receiving. And you look at the soybeans. This is really a gift for South America. These farmers are just starting to harvest their soybeans, and wow, you see this huge rally with their low currency values. This is something that they really want to take advantage of. No point in them storing any longer. They're just going to try and make some sales here. So that's, I think, going to cap the rallies in corn and soybeans. We started off the rally in corn with really tight basis in the market, trying to pry grain out of farmers' hands. We don't really have that any longer. It's freely flowing at this point in time at these higher price levels, and we don't need to continue to keep pushing higher to pry that grain loose. We're seeing a lot of products starting to be moved from the U.S. farmer as well as South American farmer. So of course you have to question now that we're hitting $5 on the May and July contracts, is that high enough that or do we need to keep going higher? The market's probably telling us that we're at pretty fair values right now.
Yeah, and then the other side of that too is it's just below break even, I think, for most farmers, isn't it?
Yeah, these are price levels, especially for soybeans, that we're just getting back to some break-even levels for U.S. farmers. So they're probably going to go ahead and make some defensive type sales because they would have, didn't see this 3-4 weeks ago, and now they want to take advantage of it, especially with that big crop in South America that's coming. We've seen some cancellations on our export sales reports, and we start to see some more. They'll start changing our balance sheet. So yeah, I think the farmers taking advantage of this rally here. And they definitely should be taking advantage of it. And even not only old crop, but looking ahead to new crop, I think we're going to plant a lot of corn acres next year. We're up in that 460 range on December corn. I think there's some opportunities as you get 460, 475 December corn. Soybeans traded, close to 4 or 1055, 1060. Again, there's some opportunities that producers probably need to be taking advantage of for this next year.
Yeah, for sure. Livestock side, what's going on there?
Well, we saw some cash cattle trade in the Southern Plains at 201. Now, the last couple of weeks, we've seen some of that trade in the Southern Plains, especially Kansas, get moved up north because you can buy cattle cheaper in the Southern Plains and pay for transportation and kill them in Nebraska. Because of the early nature week type trade this week, I think that's probably happening again. Haven't heard confirmation of that, but that's just kind of my suspicion as we bought cattle early in the week. Anticipating to move them farther north. We'll see some additional cleanup trade, and the market's certainly anticipating we're going to see it at higher prices. The feeder cattle market red hot today. Live cattle triple-digit gains as well. We're kind of pulling back maybe off of our highs because of the cutouts are down at midday, but certainly no shortage of speculative buying in this cattle market.
Have we been cold enough, long enough to impact prices or not?
Yeah, yes and no. I think the cold conditions, a little bit of snowfall probably have slowed the rate of gain for the cattle. That's nothing wrong with that really, because we have too heavy cattle already, where we have lack of supply this year compared to last year, and the same true in 24 compared to 23. Less supplies, but we made up for it by feeding these cattle to heavier weights, and we just don't need to continue to put weight on them. So if they don't gain a lot of weight in the next couple of weeks because of cold temperatures, I don't think that's really going to hurt anything in the industry.
Sure. Okay. Anything else we should be aware of?
I think those are the main things. We're probably subject especially in the grains, the soybeans, corn markets. Anything comes political down the pike, and this includes tweets from President Trump. Anything he says as far as tariffs go, especially to China, is going to move our market. That's just the world we're going to live in, and for the time being, until he gets his deals negotiated.
Yeah, it definitely is a headline-driven market.
It's going to be, yes. Yeah, we opened lower in the night trade last night when he reiterated 10% tariffs against China. And then we seemed to rally back into the morning hours when it was talked about that China had canceled some Brazil shipments, and now we're starting to weaken again because I think Brazil's going to get those shipments figured out. Whether it was pests or chemicals in those soybeans, they'll get it figured out and reship those back to China.
Yeah, and China's a master at marketing, so.
Yeah, aren't they though? Yes, they are.
So, all right, very good. Thanks, Brian. Good talking to you.
Okay.